Hello from Reykjavik, Iceland. My name is Heidar. I work for the FinTech company Meniga, and I'm so excited to welcome you to the World FinTech Festival in Iceland. To us, Icelanders, our little island in the North Atlantic feels like the center of the world, but the fact is there are only 360,000 of us. So if you ever meet an Icelander, well, that's a little bit like winning the lottery, I guess. But you might also be surprised to learn that there are many dynamic and innovative fintech companies operating here. But if you're interested in knowing more about the fintech scene here in Iceland, contact the Icelandic FinTech cluster. They have over 100 member companies and organizations which work in the field. And the Icelandic FinTech scene is quite diverse, and we got 5 great guests here with us today that represent that diversity very well. They will start the session by presenting their companies. In order they appear, they are Dr. Margrét Vilborg, founder and chairman of the board of Payanalytics, Darri Freyr Atlason, who is the head of business development at Lucinity, Svein Valfells, who is the co-founder and CEO of Monerium, Hjalmar Gislason is the co-founder and CEO of Grit, and finally, my colleague Hildur Gunnarsdóttir from Meniga. She is a senior product expert. So without much further ado, I want to introduce Dr. Margrét Vilborg. She will tell you about her company, Payanalytics. Dr. Margrét, the floor is yours.
Thank you. Thank you. And hello, everyone. So my name is Margrét Bjarnadóttir. And as Jón said, I'm the founder of Payanalytics. So what is Payanalytics? Payanalytics is super user-friendly pay equity solution that not only measures your pay gaps, but provides a corrective action plan and ongoing decision support to ensure pay equity. So why are we talking about pay equity at FinTech? Well, pay equity is especially important for organizations in competitive labor markets, such as the financial sector. So where competition for talent can be really fierce. In fact, I originally founded Payanalytics when I was approached by a COO of a financial institution that was responsible for the HR functionality within the FinTech institution. And over a 12-month period, they had been fighting a pay gap of 8%. So being super mindful about this pay gap in all of their decision-making, whether that was salary, decisions or hiring, promotions, etc. However, when they measured the pay gap again, a year later, it was still 8%. So it became very clear that you don't fight these demographic pay gaps with good intentions alone. So that's when we went ahead and built our platform. So what we have done is we have built a cloud solution rooted in mathematical research and based on fairness principles that not only measures your pay gaps, but identifies which employees should get raises, how large should those raises be in order to close the gaps, all by taking into account the operational realities of your company and your compensation strategy. And we are seeing great results. For example, our initial development partner drove down their pay gap in less than 18 months. And we make it super easy for every organization to understand how to get there. So if you measure at, say, 6%, we can tell you how much is it going to cost you to get to 4, to get to 2, and to reach pay equity, or 0%. And it's important to note that we actually provide savings. So our algorithmic approach typically saves companies between 10 and 30% over what we call the naive approach or intuitive approaches. So for example, you measure a female pay gap and you decide to give every single female the same percent raise to fix it. We can save you significant amounts of costs over that naive approach. But the benefits of Payanalytics are not just, in monetary terms. So there's a lot of good benefits of our solution. So obviously, Payanalytics assists you with fulfilling your legal and regulatory requirements, as well as the wishes and requests of internal and external stakeholders. But more importantly, at least in my opinion, is that studies have repeatedly shown that pay equity increases employee satisfaction and engagement. It increases retention and employee morale as well. But maybe back to the cost savings and the benefits, Payanalytics definitely does save you both time and money. So we are taking analytics that are really done ad hoc today and are really time consuming and making them super easy. In fact, our original development partner has been quoted as stating that Payanalytics finally allowed them to stop looking in the rear view mirror and actually looking and analyzing their pay decisions in real time, supporting every single salary decision that they make. So you can really say that we are bringing compensation analytics into the 21st century. Whether you're an organization with what I call a legacy problem, so if you think about the decisions, the compensation decisions that have been made, perhaps over decades, and now you're facing a really large gap, or if you're already a leader in your field building the workplaces of tomorrow, whichever the case, taking a data-driven approach to pay equity really delivers results. So I will not just leave you with one example of the benefits of this data-driven approach. So with one of our initial partners, who is a true equality leader in our small country of Iceland, when using our solution, they discovered that high-performing females were not being compensated to the same extent for their performance as high-performing males. Meaning the high-performing females had salaries above average, but they weren't paid at the top where they should be. So by underpaying them, the organization was at increased risk of these outstanding employees leaving the organization. And we fixed that problem. So in short, we measure pay gaps, we fix them, and most importantly, we make sure that moving forward, you can make high quality salary decisions to ensure that the pay gaps don't come creeping back once eliminated. Payanalytics is being used around the world. We now have active users in over 40 countries. We've been fortunate enough to work with organizations anywhere from 80 employees to over 140,000 employees, including a number of financial institutions in different countries. So I look forward to accelerating pay equity in your region, eradicating pay gap in one organization at a time. Thank you so much for your time, and back over to you, Jón.
Thank you so much, Dr. Margrét. It was very inspiring. Great to see a simple solution being used for a very difficult problem. Next up is Darri Freyr from Lucinity. So tell us, Darri, what is Lucinity all about?
Thank you, Jón and Margrét, for a great presentation as well. So this is Al Capone. And as many of you probably know, Al Capone was one of the most notorious criminals in the late 1920s. But what you might not know is that his laundromats are actually the origin of the word money laundering. Money laundering has changed a lot since the days of Al Capone, but unfortunately, anti-money laundering hasn't changed with the same speed. So today, around $2.4 trillion are laundered through the financial system every single year, which roughly amounts to the GDP of Italy. This is despite the fact that banks are spending around $40 billion in the US and EU alone on fighting the problem, but only seizing around 1% of the proceeds from illicit money flowing through the financial system. The culprit are old and clunky legacy AML systems that are extremely human intensive and costly for the banks operating them. Banks on average spend around 3% of their revenue on operating their AML procedures, while wasting around 200,000 hours a day reviewing what's called false positives, which basically is cases that you don't need to consider across the EU and in the US. Reviewing a case can take an employee up to 8 hours before, or on average takes an employee 8 hours before sending what's called a suspicious activity report to the local authorities. Faced with this situation, we asked ourselves this question: human or machine, why can't we get the best from both? And we came up with this alternative conceptualization of AI within our domain called human AI. And human AI centers around the connection between humans and artificial intelligence. So taking the best of human abilities and augmenting it with the best of AI. And for a anti-money laundering company, this means using sophisticated models and technology to find anomalies in behavior that indicate money laundering, pushing those alerts into a case management system that you use to process the alerts. But we don't stop there. What we do is we take information generated from the users of the system and we push it back into the detection models, thereby creating this continuously improving loop that makes the system better with every single case and customer. This happens within our beautiful UI, and if you've ever seen an AML system, you know how good this looks, and if you haven't, you aren't really missing out on a lot. And the foundation of all of this is then the Lucinity knowledge graph, and this is where we store everything that relates to our ability to detect and process money laundering behavior. So we've translated regulations into behaviors that are observable from transaction data, and we've augmented that information with things from explainable AI models and then visualizations that pertain to every single money laundering behavior. We've seen some impressive results with our first clients, finding around 5 times as many cases that the banks want to find compared to previous legacy systems, while allowing them to be 12 times as fast in processing these cases. 2020 has been a great year for Lucinity, our second year of operations. We are moving our contracted ARR from around 54K to somewhere above 1.5 million. We signed our first US Tier 1 client in a co-development effort and onboarded 15 developers onto the platform, while Lucinity retains all of the IP developed. And we raised our Series A early COVID, which was exciting as well and gave us the room to operate and work with some terrific partners as well. Our success, or our early success, is really built on the shoulders of these individuals and make up the core of our product team. GK, who is the sole founder of the company, previously served as director of compliance technology at Citi. And he gets help from people with experience from legacy vendors and international regulators and so forth. Unfortunately, people don't generally leave their jobs at Citi to found AML startups, and they definitely don't bring friends. We always want to end on this note, which basically concerns our responsibility as investors, as customers, and of course, banks in the financial ecosystem to make sure that we're promoting a transparent and fair financial system. The fact of the matter is that money laundering is the crime that fuels crime, and it's a major societal issue. The good thing, though, is finally we have the technology to break this paradigm and solve the issue if we work together towards a better financial world. Thank you for your time.
Excellent. Thank you, Darri Freyr. That was very interesting. So next up is Svein Valfells. He is the co-founder and CEO of Monerium, and he will now tell us about his company. The floor is yours, Svein.
I'm Svein Valfells. I'm the CEO of one of the 4 co-founders of Monerium. Monerium is making money smarter and safer by issuing it on blockchains. We're the first company authorized to issue e-money on blockchains in Europe, which is a very big deal because now the European regulators are saying that all money issued on blockchains in Europe should be issued as e-money. So we're blazing the trail with the proven form of digital cash on a completely new infrastructure in one of the major jurisdictions of the world. Now, why are we doing what we're doing? There's been a lot of innovation over the past couple of decades, as it were, in digital banking. Both incumbents and neobanks have made services faster, cheaper, and more accessible. But if you look more carefully underneath, then it's all the same. It's built on the same old infrastructure as it has been since the advent of the digital revolution, almost. So we're not really harnessing the full power of the internet in the modern digital bank. And just like the electric light did not come from the continuous improvement of candles, we can't continue just to innovate on the same old infrastructure. We must change. We need more than faster and cheaper. We need more than the closed proprietary silos of the current banking system. We need more than faster and cheaper. We need a shift, just like we need a shift from combustion engines to electric. We need a shift in transportation. We need a shift in banking from the old infrastructure to something that harnesses the full power of the internet, like a system that would have no intermediaries or delays in processing, no operational risk and very little cost, real-time settlements 24/7 for all parties involved, and totally borderless, where distance does not matter and business can happen at the speed of light. Voila, blockchains. Blockchains is a new data structure that was introduced in 2009 in order, according to the founder Satoshi Nakamoto, to transfer value peer-to-peer without going through financial institutions. 6 years later, Vitalik Buterin and his co-founders introduced Ethereum, which allows people not just to use Bitcoin to transfer value, but allows people to issue their own tokens on top of a distributed ledger. And also programmatically exchange any token for any token on the internet. Now, we're taking advantage of this infrastructure, and we're bridging, as it were, the old financial services of banks and payment systems and the new modern infrastructure called blockchains. So we're helping companies, particularly SMEs, transact on a blockchain by seamlessly integrating their current banking providers, their current banking facilities with blockchain. So you can send money using our services from your existing bank account to a blockchain and back automatically. And some of our partners in doing this include Tradeshift, one of the largest supply chain platforms in the world, two leading technology platform providers, Consensus, founded by Ethereum co-founder Joe Lubin, and Algorand, the first proof-of-stake scalable blockchain out of MIT in the United States. Other partners include Centrifuge, Request, Bloomy, Fuse, and Lucinity that just spoke earlier. So we're partnering with in particular with digital asset tokenization platforms to bring all kinds of interesting, cool new services to the internet, like self-settling invoices, like deep tier supply chain financing, where a major supply chain player can have the invoice trickle down many layers of the internet. We have already completed trials of cross-border multi-currency payments integrated with supply chain transactions. But we're going live. We're out of closed beta. We're going live on Ethereum in Q4 and Algorand in Q1, and white labeling later on in 2021. So please reach out if you're interested in this. Thank you.
Okay. So thank you so much for this, Svein. Now from the blockchain to the spreadsheet. Hjalmar Gislason is the founder and CEO of Grid, and I really look forward to hear what Hjalmar has to say. Hjalmar, the floor is yours.
Thank you, Jón. So I'm here to tell you that with Grid, you will never attach a spreadsheet to an email ever again. And rather than showing you slides, why don't you just go to grid.is and explore for yourself what that means. Meanwhile, I'll talk you through it. So Grid is a productivity tool that makes it easy for business professionals to transform their spreadsheets the spreadsheets they already have into beautiful interactive web documents, and then present and securely share them with anyone. Roughly 1 billion people in the world use spreadsheets, and of those that create spreadsheets themselves, about 88% say that they frequently present their findings with someone else. Now, as an author of a spreadsheet, you know that when you do that, you're giving up a lot of control. There's very little narrative you can put in the spreadsheet. People will be looking at the wrong things in there. They will be changing the wrong things. They will start digging around in the raw data that you left in kind of a hidden sheet somewhere. Soon you'll have multiple versions of the spreadsheet floating around, and spreadsheets are entirely mobile friendly. So if you receive a spreadsheet as an attachment, you will run to your desktop as fast as possible. To overcome some of these problems, people start, copy paste charts and tables out of spreadsheets into PowerPoints and PDFs and then share those instead. Those are tedious to make. They're even more tedious to maintain and update if you have to do the same type of reporting over and over again. Plus that they are completely detached from the data updates in the underlying spreadsheets or the calculations and the models that you have in your spreadsheets. Grit is for anyone that has pulled together data or built a model in a spreadsheet. And with Grit, you can choose exactly which parts of the spreadsheet you want to show and how you want to show them. You can use text layout and charts to provide a narrative to your data story. And you can allow people to interact with the model using sliders and other inputs to see the results instantaneously in their browser. Plus, it looks beautiful on any device, from your mobile phone to your boardroom projector and anywhere in between. We've been in beta in open beta since August. We have roughly 5,000 users in the system today. And we are seeing people, our users, what we're seeing from them are more or less 3 use cases. Number one is what we call model presentation. So somebody has pulled together, built a model in a spreadsheet. And what they get out of using Grit is that they are able to kind of put that up as a website that they can provide secure access to, and then it is interactive. So people can interact with the model. We love to when we hear the word tangible. It makes the models tangible in a beautiful way, where people can interact with the model. And then if you have to get a new version of it out, you simply update it in the spreadsheet, and all those updates get propagated to the people with access to the Grit document right away. Use case number 2 is reporting. We've actually seen more of this than we thought, where people are simply reporting on top of static data. But what they like is that they are able to put a mix of charts and narrative together on a page that looks pretty good, and that the updates they make to the underlying spreadsheet propagate immediately. And creating a kind of the next week's report simply means that you're moving your data references 1 column over. Finally, embedded calculators, where people can build calculators themselves on top of Excel using their existing spreadsheets instead of bringing in a web agency to do it. Literally, in some cases, replacing tens of thousands of dollars worth of web agency projects with something they can do themselves in less than an hour in our tool. We believe that anyone should be able to present their stories, the stories in their data, and in doing so using the tools they already know. Spreadsheets, that's where everybody turns, where they have to do something with numbers and data. Grit is not replacing spreadsheets, but we are working on top of existing spreadsheets made in Excel and Google Sheets. Now, spreadsheet reporting and presentation is already a huge opportunity, and that's what we're taking on. But there is more to it. Spreadsheets are the go-to tool for pretty much every knowledge worker in the world when they have to do anything with numbers and data. And as a result, every organization has what I like to call a spreadsheet fabric, an assemblage of spreadsheets that lie on people's personal computers, network drives, and so on. Taken together, these spreadsheets probably hold more proprietary business data and logic than any of the formal systems like the CRM, ERP, BI systems, and so on. But nobody knows exactly where they are, what they hold, who has access to them, and kind of what they do. And only that without them, the business would probably come to a screeching halt. This fact makes me believe that helping organizations get a handle on all the valuable data, logic, and processes that is driven by spreadsheets is actually one of the biggest untapped opportunities in business software that is left out there. But it can only start by winning over the hearts and minds of the end users that are creating and reading those spreadsheets, and that's what we're doing now, making their data shine, making them shine in front of their customers and bosses. As mentioned, Grit is currently in open beta with commercial launch coming up in Q1 next year. So go to Great.is if you aren't there already, or type Great Spreadsheets into Google and get started with Great today.
Fantastic. Thank you so much, Hjalmar. So last but not least, my colleague and dear friend, Hildur Gunnarsdóttir from Meniga. What can you tell our viewers about our workplace, Hildur?
Yes, hello. Thank you, Jón. My name is Hildur, and I am a senior product expert at Meniga. And I'm here today to tell you about Meniga in 5 minutes. So Meniga's mission is to help people lead better financial lives, and we do so by partnering with banks. We're an established FinTech, and we've been working with banks for over 10 years now, and our platform is designed for the future of open banking by consolidating and enriching transactional data, all accessible through rich APIs. We're live in over 30 countries, and we're really proud to power one of many of the successful digital banking experience provided by global banks such as UOB, UniCredit, and BBC, and many more. Meniga's product portfolio is divided into 3 pillars: data management, finance management, and beyond banking. Today, I will focus on try to give you a snapshot of data consolidation and enrichment, personal finance management, and then I will go a little bit beyond banking and talk about our newest innovation, Carbon Insights. Data consolidation and enrichment is the backbone of our digital banking platform, as it consolidates transactional and financial product data into a single repository. Once the data has been consolidated, there are 3 key steps to achieve enrichment at Meniga, which is cleaning the data, categorizing the transactions, and then mapping the transactions to brands and merchants. Enriched data can really provide banks with the opportunity to give their users more informative transaction detail screens, or provide users with detailed spending reports to give them an overview of their finances. But the cornerstone of Meniga's digital offering is our personal finance management. It is an innovative toolbox that kind of empowers rich functionalities and insights, all through RESTful APIs. Our product offering can be standard, from providing users with transaction overview or user profiles or Google-like search, but I want to use today to talk about some of our more advanced functionalities. At Meniga, our core is to help people or banks create meaningful engagement for their customers. And we often do so by looking into gamification of the financial services. In doing so, we're constantly seeking inspiration from other industries that have successfully managed to apply gamification to their products. Menika Challenges, for example, our product is inspired by health apps such as Fitbit and Strava. And Menika Challenges is a category-based saving exercise where banks can encourage their users to spend less in certain categories or a given time. Banks can, for example, challenge their users to spend less in fast food categories for a month. Challenges is one of our most popular features, and we've seen by applying gamification to financial goal setting and increase in app usage. And best of all, we're seeing that users that have actually accepted a challenge have managed to save 270 euros yearly, which is really great news, and it resonates well with our vision. I also want to use the opportunity today to provide you with an insight on how other banks have innovated on their own terms using the Menika platform. We were really lucky to be part of one of the most exciting gamification projects in the financial industry when we partnered with our client UOB in helping them creating their app Tomorrow, which was launched in 2019. The app helps users build their city of dreams by saving. So the more the people save, then the more the city grows. Tomorrow has really taken gamification of savings to a higher level, and the success of the app can really be underlined by the fact that 3 out of 4 customers are willing to spread the word about the brand. Another feature that Menika offers that we've seen gain a lot of traction during uncertain times is our cash flow assistant. Menika's cash flow assistant uses advanced machine learning algorithms to identify recurring transactions and provide users with a more accurate overview of their cash flow situations. It basically shows users their upcoming transactions and how those might affect their projected balance. Last but not least, I'm going to go a bit beyond banking and talk to you about our product, our newest innovation, Carbon Insights. Carbon Insights estimates customers' carbon footprint through their spending patterns by looking at the spending patterns. It really helps customers get a deeper overview into what is their carbon footprint. And our product also empowers customers to act by offsetting via internationally recognized offsetting programs, such as the ones provided by the UN. This is a really great tool for banks to engage with their customers in the fight against climate change. And it's also a great chance for banks to take their CSR strategies into action with their clients. We're seeing a lot of interest in this product from other banks, which is really great news for our planet. This is all the time I have today. Thank you very much for listening. If you want to know anything more, check out our website.
Thank you so much, Hildur. And thank you, everybody, for your fantastic presentations. Such a impressive range of FinTech solutions, tech solutions. And one theme that I'm seeing here is you're all tackling complex problems with simple solutions. You all have one thing in common, though, is that your companies are all based in Iceland or have significant operations there. Can you maybe comment on what is the upside of being here in the middle of the North Atlantic?
If I may start, the biggest upside is that the fact we had a massive financial crisis in 2008. So Monerium is built based on the premise that financial services can be rebuilt from the bottom up. And we learned the great many lessons from rebuilding financial services after 2008. So starting with a clean slate is I think, for us, the biggest advantage of being in Iceland.
Yeah, there's a lot to that. Freyr, you guys have a lot of experience working with banks now all over the world. What is your perspective on this?
So what we've felt like is the biggest advantage for us as a very early stage company, it's basically our second year of operating, is the kind of talent to competition ratio that we're looking at here in Iceland. So we set out with running a company from New York, and really, Iceland was just about getting it off the ground, and then we were going to move over to New York and run it from there. And what we realized, and now we've hired 30 people, is that we were finding tremendously talented individuals, and we're not competing with Google and Facebook to retain that talent. So I think that's a comparative advantage to many other places in the world.
Mm-hmm. Hjalmar, you run a company that has global ambitions while you're here in Iceland.
Yep. Yeah, so actually, funny story. So I was living in Boston when I decided to start Grid, and I decided to move to Iceland to set up the company. And Boston is on pretty much any top 10 cities in the world to start companies, and I haven't seen Reykjavik on one yet. But the reason was the talent. The reason was my network here. I knew which people's shoulders to tap. And kind of the close-knit network here has helped us get a very good kind of core team together in a relatively short amount of time. And the fact that, it's easy to get everybody into the same location, given certain COVID restrictions at times, that is something I value a lot in the early stages. So, so it's the talent. There are certainly other challenges as well, but overall the environment here is pretty neat, especially while you're still small.
Margrét, what is your perception? Does it help to be here in Iceland? Is there, for example, access to customers that want to take things forward with you quickly? Is that one aspect that you found?
Yeah, I think I can echo a lot what the others have been saying, and that's definitely, at least in our case, proved very useful was the closeness to our initial development partners. So they jumped on before. So if I give you just a sense for the journey that we have been on, is our beta was an Excel add-in. So speaking to Hjalmar's grid, it would have been nice to have a grid because it was an Excel add-in, but people started paying for it. So it became very clear that we had something, and then we took off from there. And I think kind of reflecting to my personal bubble and what we're doing, I mean, Iceland tops on all the lists for gender equality. And I mean, we thrive from that. So we got a head start on the world because Iceland is so forward thinking when it comes to equity and therefore pay equity. So we developed a solution for the world before the world kind of realized. But I think in many countries, and we see this, both in Europe and, at the state level in the US, people are taking action very quickly. And then it helps to have the 2 years running ahead on everybody else.
Great. Thanks for that. So, Hildur, I'm just going to pivot a little bit. We had a pretty strange year. And what is your perspective on how we've been affected by the pandemic and how our customers and, we as workers or employees, how did that affect you and your customers, for example?
Yeah, it's a great question. It has, of course, affected everybody. I don't think anybody can say that it hasn't, but I think what we can take away from it is a lot of positive things. We sent out an independent survey asking bankers how the COVID-19 situation would affect them. And we saw a lot of positive aspects that 85% of the bankers agree that COVID will force the customers not to rely more heavily on online and mobile digital banking, which is, great news, taking kind of the trend of moving banking online and into digital channels and kind of accelerating the speed of that, because nowadays customers really don't have the chance to go to a branch. So there was a lot of people who were forced to do their banking online who would have maybe rather done the experience in their branch. And there's actually quite a fun fact that 12% of the UK population suddenly decided to download the banking app for the first time ever. So that's around 6 million people that the banks kind of have to suddenly cater for. So I would say that's really positive aspect of COVID from kind of a banking side.
Definitely a trend to look out for there. Svein, does this affect you guys at all in terms of getting more people to use your services?
Yes, we're on track with where we wanted to be when it comes to rolling out our services on blockchains. The natural sort of time frame hasn't shifted that much. We can feel that our partners in Europe that are going through lockdowns sometimes have interruption of communication with them. And then a couple of our core employees have had to have a quarantine. But in principle, we can see the same wave of innovation rolling out independent of this pandemic. And we count ourselves actually very lucky to be in Iceland during the pandemic because of the geography, because of good public health, including testing capacity. We have, and I gather with the other colleagues as well, gone through this rather horrible pandemic rather easily.
Mm-hmm. So, Margrét, do you think? I was thinking about this last night. This is a world-changing event. How does it affect gender equality in the workplace? Do you think there are negative or perhaps even positive implications from this?
It depends on the country. A lot of indications, for example, coming out from the US are that this is hitting the female workforce especially hard, because in contrast to the infrastructure that we have here in Iceland, where we have managed to keep, for example, daycares open, it's huge for parents. And what we are seeing in the US, especially because this has been going on for months, is that people are giving up on, having their kids next to them and doing their job. And the surveys show that this is hitting the females worse. So there has been fallback in terms of pay equity for sure. Then it's about to have the right tools to, catch up. And one interesting thing is, it's interesting, it's sad, but interesting, is that, a lot of organizations have had to downsize, right? And if you think, for example, I talked about in my presentation that many companies have legacy issues, right? So they just have pay gaps because they haven't been paying attention for many, many years. So once you're scaling down, that's an opportunity to change. So then being able to understand the impact of, this new setup, the new organization, who is let go, the new set of salaries, is also an opportunity to build more equitable workplaces. And we have seen that actually in our work.
Okay. Last question for you, Darri, Freyr. The pandemic and money laundering. Do you have any comments on, well, we're getting out of the pandemic, hopefully, with vaccines coming up, but how do you see the effects on the pandemic on financial crime and then the road ahead?
Yeah, it's similar to what Hildur talked about with the acceleration of digitization and remote work and, all of the necessary changes that a pandemic brings, or we learned that a pandemic brings. I mean, we've been in a very fortunate situation because it kind of expedites the need for our solution because of how we're set up technologically and also how we just set up our operations as well. So we feel like there's a shift in how money moves, and there's also a shift in behavior which just relates to a looming economic contraction as well. So that's been favorable to us. What I'm also interested in observing in the coming months as well is, how will a post-pandemic world, which is coming out of super low interest rates, respond in how capital will flow? Like, will that mean that capital will continue to seek alternative assets such as venture capital to retain acceptable returns, which should be pretty favorable to companies like us? I think that will be a very interesting thing to observe for fintechs around the world.
That's a great note to finish on the session from Reykjavik, Iceland. Thank you all for presenting and speaking to me today, and to all of you who watched. Thank you very much. Have a great rest of the conference. Thank you.